Hey guys, it's Paul Harrison after the Monday night webinar. Again, a fantastic webinar and really some great questions and what have you coming up. Um, One of the things we really do try to focus on with regards to the webinars is not so much going over the rules, as you know, obviously we do teach the rules and there's a fair degree of repetition on that. But really, what we're looking to do is also build on what we call the grey area. So a lot of the trading psychology we work on, also getting our clients a deeper understanding of really what works for them as far as their trading goes, and really what moves the market, so they get a deeper understanding, not just the actual rules that we have, but also then the other areas that are going to make them successful. And one of the questions that came up tonight was really, I think, a question that a lot of beginners have challenges with. Um, and it was asked. It was asked of us by a gentleman who really has a very good, solid understanding of the fundamentals of what makes up a particular stock. And he was sitting there and thinking, basically what kind of environment are we in right now? We're in the festive season, and obviously in the festive season, there's a lot more eating and drinking that goes on. So, he took it upon himself to go out and look for stocks that are involved with, should have an increase in consumption over Christmas time. And he found this one stock in particular. And what he was looking at was really then, because he believed it had a good reason to be rallying over the festive season, what he then tried to do was really start putting a strategy around it as well. So he tried to implement the strategy that we teach onto the assessments that he'd had already of what was happening in the market. And really, the thing there is he was basically taking two completely different strategies, and placing them over each other and trying to make them work like that. And this is something that happens a lot. I mean, it makes good fundamental sense to be able to understand that if the consumption is going to go up, then the consumption is going to go up for a particular product or service, then there's going to be an increase in the share price. We don't always see that happening. So the best guidance I can give you is, trade what's in front of you, particularly when we're trading stocks the way that we trade with, technical setups. So we're looking for technical setups, we're looking for chart patterns, and the best guidance really I can give anybody is trade what you see in front of you, because that's really what you should be looking for in the kind of time frames that you're trading. So, don't make trading overly complicated. It's really it doesn't have to be as complicated as what a lot of people believe it to be, and just keep it straightforward. And obviously ratios are important, but don't think that you have to make it as complicated as possible, because you know adding complication to it doesn't always ensure that you have a better return on there as well. So that's about it for the call. I think it was just a great learning curve that our students are on at the moment. But I don't think there's going to be one of these little these mini snippets next week. So I'd like to take this opportunity from everybody at Investment Mastery to wish you an absolutely fantastic Christmas and a really good New Year. 2012 is going to be huge. I've got no doubt. And yeah, look forward to working with you all in the future, and helping you move forward there as well. So have a great Christmas and all the very best from Investment Mastery and myself, Paul Harrison. Thank you very much for your time. Have a great one. Cheers, folks. Bye bye.